Welcome to today's video technical update presented by CMS Forex. It is Friday, December 4th, 2009. I'm Fan Yang, your technical analyst here, and I'll go over some developments in the Forex market. We continue following up with the pound dollar, euro dollar, and the euro pound pairs. Also, we'll take a look at the Aussie dollar pair. This video is being prepared at about 4:45 p.m. Eastern time at the close of the US session. Let's start with the pound dollar pair. This week we see that the market is attempting a third leg down since the market tested 1.6850 up here. So this is 1, 2, and we may have a third leg down here to test this short-term support. If that breaks, we would have further decline to the 1.6 area. This is basically a 78.6% retracement of this swing. So that is the outlook for next week. In the 4-hour time frame, we might have a slight correction at the moment. See, we had this strong decline here, helped by the better than expected non-farm payroll data. But next week we see here we have oversold conditions, so we may have a little bit of correction, and we see here another. This is a bullish Gartley that formed, and that's why we can anticipate a slight minor correction. Now this correction could go up to 1.65, 1.6550 area here before continuing to decline, and that would, fundamentally that might be based on what the Fed's how the Fed reacts to the job data and how the market thought about what the Feds would react to the jobs data this week. From a technical perspective, we would wait for that reaction. If the market actually pushes the pound dollar up and breaks this level, breaks these 1.6650 level, then our bearish outlook would be scrapped from our short-term view. However, it looks likely that the market will continue falling next week. Otherwise, we may have a short-term range here between the 1.6350 area and the 1.68 area, roughly around this area. The euro dollar also has a very important development this week. We see from this daily time frame that the market has reached a 78.6% retracement since the fall from last year. Now, we had this trend line that was intact, but today's price action, this is dollar strength that was induced by the better than expected jobs data. So this bearish candle here is cracking our long-term support. That doesn't necessarily mean we will have a reversal. That just means that we are currently in consolidation, and next week we are still seeing we're going to start with the market testing this support at 1.48 at the 1.48 level. If you look at the 4-hour time frame, you see that more clearly. This 1.4850 area is being tested now, so next week we'll see if the market can break this, or otherwise the market will continue ranging, and that would be between 1.48 and 1.51. If it breaks the next support, which is a very significant support, we see here is the 1.45, 1.46 level. If that support is correct, then we will have a very significant signal that the market is about to reverse. For now, it's a very strong short-term bearish signal, but not enough for a longer-term outlook. The next pair is the euro pound pair. Our wave count is still valid as the market is developing a wave 2, sub-wave 2 of this wave, primary wave 5. So, in the 4-hour time frame, we have a completed Gartley. Actually, let me go back to daily time frame just to note that here we have a stochastic crossover. So this is a bearish signal that we are seeing from the daily time frame. Now looking at the 4-hour time frame, we see a bullish Gartley completed. Okay, so to start next week, we may see some short-term correction back up here towards the 0.9050 area, and then we may have another decline. The more more intermediate term outlook is that next week we have a further decline to the 0.89 area. This is the 78.6% retracement of our rally here. So if the market is supported somewhere around here next week, we may start considering the continuation of our wave 5. So continuation of our wave 5, which means the start of wave 3. So that so that would be this type of outlook. Okay. So again, next week we will anticipate some further intermediate term decline towards the 0.89 area. Well, short term in the daily time frame, intermediate term for the 4-hour time frame. Then from there we'll look at some bottoming action and see if there will be a signal for our bullish case. Our last pair is the Aussie dollar pair. Much like the pound dollar, we had these 3 legs down forming, and it would be targeting the 0.89 area. This is an important support, and if it's broken, it is a strong reversal signal and a completion of this double top. So otherwise, this will be support for the pair during this sideways consolidation. So looking at the 4-hour time frame now, we see this week we had this minor or short-term head and shoulders. Then we had this strong break. Next week we should expect maybe some minor pullback to start, but if the 0.92 area holds, or this area between 0.92 0.9250 holds, then we can plan for a short-term outlook for the market to test this 0.90 area. And really this area here, 0.89 being the outer bound of this support, is a very significant support, and therefore the break is has very significant implications, as we mentioned, but it should be treated as a very strong support. So if we see bottoming action here at the end of next week, we should consider this pair to remain in range, to remain in this range between 0.89 and 0.94. Alright. Although I want to add that if this trend line breaks, that's also a strong implication of a continuation. But if you see in the longer time frame, we have some resistance area here at 0.95. So the upside is limited, but if this breaks, the market's still showing strength. That wraps up today's analysis. Make sure to visit fxtimes.com for your updates, live coverage event, and educational resources. Once again, I'm Fan Yang, your technical analyst here at CMS Forex, and I hope you have a great weekend.